All right, let's get right into it. For what feels like forever, fintech has been the rebellious teenager of the financial world, right? It's been fast, a little chaotic, and always about disruption. But something's changing. We're seeing this massive shift, this maturation. This is our explainer on what we're calling fintech's adulthood. And this quote just absolutely nails the change in mindset. Think about it. It's not just about playing the market anymore. Now, it's about wanting to be in the room where it happens. This whole idea of cosplaying as a venture capitalist, it really points to this deeper desire for ownership, for earlier access, and for a real say in the financial world that's being built around us.
So here's the bottom line. The era of just being a cool app with a slick interface, that's over. The new game is all about building lasting, institutional-grade financial infrastructure. It's way less about the hype and way more about the plumbing. Today, we're going to look at 3 companies, Robinhood, Gemini, and Stripe, that perfectly show this transition in action.
First up, Robinhood. They built their entire brand on making stock trading feel like a game that anyone could play. But their new chapter? It's about unlocking a level that until now was completely locked off to everyone except the ultra-wealthy. Investing in companies before they even go public. And that word right there, pre-IPO, that's everything. For decades, venture capitalists made their biggest money by getting into companies super early. By the time a company actually has its IPO, a lot of that explosive growth has, often already happened. So what Robinhood's trying to do is crack open that black box, packaging up these private deals for their everyday users. Now, of course, this also brings a whole new set of risks. These are private companies. They don't have the same public scrutiny. But the appeal of getting in on the ground floor, it's undeniable.
And wow, this really shows you the pivot, doesn't it? Remember the whole GameStop frenzy, the meme stock mania? That was the old Robinhood. The company you see on the right is all about long-term wealth building. We're talking retirement accounts, credit cards, and now access to private markets. It's a huge strategic shift from just enabling YOLO trades to actually helping people with thoughtful asset allocation. I just love this analogy because it makes the concept so perfectly clear. You might not be in the studio making the music, but you're getting a listen way before the rest of the world. It's all about that feeling of being an insider, and let me tell you, that is a powerful product to sell.
Okay, so let's switch gears to our second story and see how this all connects. Over in the wild world of crypto, you've got Gemini, an exchange that built its whole brand on being the adults in the room, the stable, trustworthy choice. But lately, they've been facing a really serious crisis of stability.
Look, this isn't just one person leaving for a new job. When your COO, your CFO, and your chief legal officer all head for the exits in a really short amount of time, that signals a massive crack in the foundation. That kind of churn at the very top, it doesn't just rattle the market, it completely shatters user trust.
And that's the domino effect right there. In a space like crypto, which has a long history of hacks and collapses and rug pulls, your reputation is literally everything. In this world, trust isn't just a feature, it is the product. So for Gemini, this isn't just bad PR, it's a direct threat to their entire business.
This just captures the irony so perfectly. The broader crypto market is actually recovering, big institutional money is flowing back in, the audience is excited again, but internally at Gemini, the backstage drama is threatening to derail the whole show. It just goes to show you that in fintech's adult era, how you run your company on the inside is just as important as what the market is doing on the outside.
And that brings us to our final piece of the puzzle, Stripe, the quiet giant of online payments. While everyone else was out there chasing headlines, Stripe has been making this methodical, almost invisible power move to build the actual backbone of the financial system. Okay, let's be absolutely clear. This is a huge deal. A federal charter is basically a license from the government to operate like a national bank. For years, fintechs like Stripe have had to partner up with traditional banks to do basic things like hold deposits or move money. Getting their own charter, it's like a software company deciding to just build its own operating system from scratch. It's a massive leap toward true independence. And this table just breaks down the advantage so clearly. Instead of renting infrastructure from partner banks, a federal charter would let Stripe own it. They could operate under one set of federal rules, not some messy patchwork of state laws, and they'd get direct access to the core financial highways, the payment rails that move all of the money. In short, they would finally control their own destiny.
And that right there, that is the core of our whole theme. Stripe's move isn't flashy. It's not a meme. It's about getting the right licenses and building the fundamental infrastructure. This is the very definition of fintech growing up. So, we've looked at three pretty different stories, right? Robinhood is opening up access, Gemini is struggling with stability, and Stripe is building control. So what happens when we put them all together? Well, we get what we're calling the new fintech triangle. First point of our triangle is access. This is Robinhood's whole play, breaking down the walls between the public and private markets, giving everyday people a shot to invest before a company's official public filing, the S-1, even sees the light of day.
The second point is stability. The Gemini story really shows us that as these fintech companies become major institutions, things like strong leadership and good governance, they aren't just nice-to-haves, they are an essential part of the product that customers are actually buying. And the final point of the triangle is control. This is Stripe's entire strategy, moving up the stack from just providing a service to owning the fundamental rails that the service runs on. It's the ultimate power move.
So, bringing it all together with this framework, access, stability, and control, it gives us a really powerful lens to see what's coming next. The question isn't who's going to disrupt the banks anymore. The real question is, as these disruptors become the new institutions, what kind of financial world are they building, and what does that mean for the rest of us?